Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Update for April 14th, 2013. I hope everybody's all ready for tax day tomorrow. I know for me it was a very, very painful year as far as taxes go. Hopefully you guys are all set with your taxes as well. Before we get going, I'd like to quickly go over our disclaimer that this presentation is for educational purposes only, and we're not broker-dealers and are not making specific trade recommendations. Also, the risk in trading securities, options, and futures can be substantial, so please be aware of all your risk factors prior to placing any trades. Be sure you're aware of and have thoroughly read the characteristics and risks of standardized options available at your broker. Also, any trades or results in this presentation may or may not be the result of live trades. If they did happen to be computer simulated, we do the best we can to make sure they're accurately represented. And let's move on here. I'd like to quickly just kind of scoot forward right into the session. Taking a quick look at the markets, the SPX did finally come up and touch its all-time highs on Wednesday. And not only did it touch them, it finally blasted through them. Came up here, retested the high, and had a nice bullish candlestick off of that. So there's not much to say about this except that this is continues to be very bullish. The market continues to be very, very overbought and continues to climb the wall of worry. So we continue to have bullish chart patterns in an overbought market. I would be very hesitant to be long this market, although I do say the chart patterns are still very, very bullish. I would think that since the all-time highs are here, the news in general hasn't been very good, and if that continues, then I would expect more or less a sideways market. This doesn't look like a market that's coming down. It just looks like a market that may stop going up. So from here we have a bullish chart pattern overbought market. I'm still thinking we may go a little bit sideways. If you remember, we were bullish on the SPX because I thought it was going to break to all-time highs. I didn't know where it was going to go from there. Apparently the participants wanted to keep this thing going, and they have, and again it did hold for the week, so that's kind of bullish. We'll see what happens this week. Moving ahead to the Dow, this is an incredibly bullish week for the Dow. We come down, we tested our trend line here, we just flew off of this thing and continued to climb. So we have a bullish chart pattern, albeit overbought chart pattern with the Dow, and the circumstances are pretty much the same. I'd be hesitant to buy this market. However, the longs keep pushing it up, so obviously there's money continuing to come into the market. I would expect this to settle back for a little bit and maybe set in again, maybe possibly a little bit sideways from here. If we take a look at the NDX, finally we got participation with the NASDAQ. We had a very, very bullish week this week. Other than the gap down here that happened towards the end of last week, it's been all buying in the NASDAQ. This is a nice, big, strong move, and we finally get some participation here. So give the market neutral traders a little bit of excitement in the NASDAQ last week, which is quite a change from the boring time they've had over pretty much all year. So this breakout is bullish. We are heading towards our post-crash highs here. I would expect the market to reach post-crash highs, so a little bit higher on the NASDAQ. And if we shoot over to the Russell, as expected, we've kind of held this range so far. We're between 955 and 910, which was more or less expected. Didn't know what was going to happen at this 932, 933 level. Obviously, we blasted right up through it with the bullishness in the market on Wednesday. And we continue to be in our sideways range, which is a bit wide for us this close to expiration. Realistically, in close to expiration, you don't want to see this kind of an explosive move in a week. It gets kind of hard to stay with. For May trades, there should be no problem whatsoever. So this year, I do expect a continued sideways move. We might come up, especially if the NASDAQ wants to push a little higher, retest these highs here. I wouldn't expect too much higher as of yet, unless something really weird happens. I would expect a continued sideways movement in the Russell. Let's take a look at our positions. I will start with the simple positions first. V Condor in April, 7 days to expiration. Look at our analyzed graph. We look like this. Let me back out. And I could take this off now and pretty much get close to what we have here on the expiration line. However, I'm just going to kind of let it sit and expire. I'm not going to fight to get the position off. I may end up putting an order in, and if it happens to fill, it fills. If it doesn't, it doesn't, just to get some of these spreads out at a really good price. But really, I'm not going to concern myself with it. As long as the market stays under 975, 980 this week, then I wouldn't even give this a second thought of holding it. Or if it stays over our 875 level, which I think there's a really good chance of both of those. So this is likely going to be expiring this week at a profit of somewhere in the neighborhood of $3,300. One of the things I did do on Friday is I moved this call that was here out a little bit. If I look here, it was the 960 call. I took it out to 970, just pulling a little bit more money out of it. There was $1 in it, so that's $100. Go ahead and make the move, collect another $100, and this is where we sit. If we take a look at the V Condor for May, we have a very similar setup here. We have the market that's just been kind of hanging here in the center. Because we were hanging here in the center, what I did is I widened out my straddle. I took the options that were in towards the center and I just moved them out towards the edges. If we take a look at our T-log, pretty much the same time of day. I did it with a condor. I sold out my 970 calls, bought some 980s, picked up almost $3 there. I sold my 910 puts, bought some 930s, picked up about $5 there. And that took and rose our expiration line so that if the market decides it wants to completely hang out here for a while and I don't do anything else, we should be expiring at around $4,000. If we get a creep up either way, then that would be good. If we get a really harsh move, then I wish I kept my straddle in place. But as of right now, everything is looking fine, and again, expecting a sideways market in this range from 950 to here. That's going to be really nice. So until my opinion changes, I really like this position here. The simplest of the simple was the May Bearish Butterfly, which got absolutely nothing all week. We are still in our opening position at 940 butterflies. The trade is up 10% of planned capital, or about 33% of what we actually have in the trade. And here's what we look like here. If we continue to make our range, then this is going to be a good trade. If we break the range either way, then we'll have to chase it. One of the things I like to do when we get this kind of money is I like to start thinking about making sure my delta's cut back. So if we start pushing over 250 delta in either direction, we will start scaling in as if we were in expiration rules here, and we'll see how far we can take this thing before we get into trouble. So right now this trade looks really good. All right, let's go to the complicated trades. Let's go to our April M3 trade. All right, so we did an update on this on Wednesday. So I'm only going to go from Thursday because we've had some decent sized market moves. We're right up on expiration. The position's really tight. It's just been kind of a pain in the neck. So what we did is on the 12th. I'm sorry, let's go back to the 11th. And I'm going to have to look at the T-log to even remember what I did because there was a ton of moves here. Okay, so we come in here Thursday morning, which is the day I made an update on the 10th. And you notice I did correct my profit and loss from the prior update. And the reason is I wasn't keeping up with the numbers. And this is what I usually do. I convert them at whatever price I can, whatever price is listed here on option view, and then I'll go back in and I'll just correct one or two prices to get it back to about where it is. So this is where we're actually sitting here. We have kind of a mishmash of stuff on the put side, and we're long 10 900s, short 5 910s, short 5 920s, short 10 930s, long 5 940s, and long 9.5 960s with 3 long 890s. We come to the end of the day. I'll just show you the position we moved to. And we did this with a combination of butterflies and condor orders and vertical orders. But we just kind of switched that position to this position here. So we're 10 long 10 900s. We rolled these shorts, 910, 920 shorts up to 940. So now we're long 10 900s, short 10 930s, short 10 940s, long 10 960s, and I still have my 3 890 calls. and that was to deal with the up move that we had on this day, and this is what our new position looks like. Still a really nice looking M3, and I did pretty well till here. On Friday, I let this down move early in the day. I took it a little bit too seriously, and as has been the case for the last 3 or 4 months, anytime you make any kind of a downside correction, you get severely punished for it. That's kind of what happened with us here. If we come in on the 12th and I go to 1047, or let's just go to 11 o'clock, we had a down move in the market. When I got the down move in the market, I went ahead and I bought 4 930 put butterflies with 30-point wings. So I bought 4 960s, I bought 4 900s, I sold 4 930s, put me in a position like this. Now, had the market settled in here, that would have been very nice for us. However, if you remember right, we got whipsawed pretty severely, as has been the case. And being close to expiration, we are sensitive to stuff like this. So, as the market reversed, to back out of this, let's just go to noontime. I started buying verticals here, 930, 940 verticals, and then I sold out of one of these calls and ended up in a position like this. And then if we go just a little bit further in the day, let's just go to, looks like about 130. Let's go to 1330. We made another major adjustment because the market just started going a little bit higher. I came out here and I rolled 4 of these 940s up to 950. I also rolled 4 of these 900s to 910, and that is to help control my capital level. And that gave me a position that looked like this, which still is a very nice, healthy looking position, by the way. And I do still like this position. However, we paid a lot for all that moving around. We paid a lot without profit and loss. Had I left the darn thing alone, the thing would be up money at this point. And then when we go to the end of the day, I'll show you our positioning at the end of the day. And what I did is I did another 2 of these condors. I rolled 2 more of the 900s up to 910s, and 2 more of these 940s up to 950. We close out with a delta of minus 55, a theta of 565, and a position that looks like this. Not the worst looking position. However, like I said, had we left it alone, we'd be up a real decent amount of money now. So it just kind of ticked me off a little bit. Partially on myself, I was a little too fast to react to the market, and partially because it won't hold any sell-offs. It's you just quickly get hammered for any of that. So if we get some settlement in the market on Monday and Tuesday, our theta level is going to be so high that this will come in relatively quickly with a decent profit, and it will be pulled off more than likely because I'm kind of just sick of it. And if not, then we're either going to chase it or pull it off at a loss. So far, this is where we sit. Hoping for a calm market Monday, Tuesday, and be able to just kind of roll out of this thing. If we take a look at our April Bearish Butterfly, and we go back to the morning after the last trade update, here's the position we sit in: 10 940 butterflies, 10 960 butterflies, 7 920s. On Thursday, I ended up selling off 5 of these 920s because the market had been going up. So if we go to the end of the day, 5 of these 920s are gone. And this is what our position looked like at that point. We had the same situation here where on Friday the market sold off in the morning, and I got a little rambunctious and jumped on top of it. I ended up buying 6 of these 920s back a little bit later, and here we are with 8 total on the 920s. Of course, the market reversed on us, and by the end of the day there were no other adjustments. We're sitting here still up about $1,000. Had we left that one alone, that would be looking really nice also. My mistake was being home Friday and watching the market instead of out playing like I should be doing. So here is this is position as we sit here. If we take a look at our ROCK position, This here is still doing well. I've just had a lot of trouble trying to make any gains. In other words, we've been sitting up between $5,000 and $7,000 for a week or so now, and with the market swinging around like this close to expiration, it's hard to actually add any more money to it. Some of the moves that we made since the 11th were, looks like I was pretty busy on the 11th, but it really wasn't that much. This is buying 1,910 put butterfly on the way down. This is buying 2 950, 960 verticals. This is buying another 3 950, 960 verticals on the way up. And on Friday, this is just kind of the result of this. These 4 transactions was just 3 910 put butterflies. So as the market started coming down, the first thing I did, because there wasn't a whole lot of value in these 910 puts, the first thing I did was I bought a single 960 put, and then as the market started to come down and they've got a little bit of value in these, see $1.25, I went ahead and I just did the whole butterfly. I bought 3 total 910 butterflies, and this is what this turns out to look like. I have 3 910 butterflies. I have 10 930 butterflies. And if you remember right, I only have verticals in here because I couldn't get enough money for the shorts. So I have 5 920, 950 verticals and 5 920, 960 verticals. The position currently looks like so. I'm looking to get a $10,000 profit target out of this. I may end up pulling this early if the market starts acting up too much. Again, it's been kind of a tough, rocky month, but it looks like we're doing pretty well here. So that is all the positions that are on. The May positions have been pretty easy to deal with. The V condors have been really easy to deal with. The rock trade has been fine to deal with, although there's been a decent amount of movement because, again, we're close to expiration. We've had a lot of move back and forth. The Bearish Butterfly and the M3 have been kind of a pain in the neck, but they are doing okay, holding their own, and time will tell. We have till Thursday to make some money with these, and we'll see one way or the other how it makes out. So have a great week, everybody, and I will keep you up to date with any changes. Thank you and good night.